One.
Hi, I'm politics and culture reporter Robin Murphy here with some breaking news on the economy and the election 2012. I have an opportunity to be here today with former Wall Street financier and HIC CEO Troy Holland, who has some very interesting observations and news that you believe will have a significant impact on the economy and the election.
Yes, I believe that the president has implemented some policies that are going to move this country forward to the next economic boom.
And by economic boom, you mean we're not still just inching, we are turning the corner. It's about to happen.
The boom is around the corner. As a matter of fact, I believe that the policies that are in place right now have the next boom set to take place before you know it. I mean, within the next, it could be weeks, but it won't be more than a couple months. But the boom is here.
Give me an example. Boom how? Is it real estate? Is it jobs? Is it growth? What are we doing? Is it GDP?
Well, when I first started to look closely at it, I thought it was just a slight rebound in real estate. But after careful analysis, I realized that we're about to have a boom in every single asset class across the board.
And why is this significant that you're saying it's starting now, but we're just days away from the election? So this is significant politically because?
Well, it seems like the president's weakest topic is the economy. And even in the debate, the first debate, he seemed a little lackluster in regards to his position on the economy. It's like he put a lot of policies in place, and it seems like they're not taking off fast enough. And I don't even think that he even understands why they're not taking off. And I think that's why we saw such a lackluster performance. However, the policies are in place, and they're ready to go. And it's not just a boom. Here's the significance in regards to this election and this economy about to take off. The economy is going to take off because of the policies the president has put in place. But it depends who's in office and who's elected, who's going to benefit from these policies. Now, the policies the president put in place is going to create the next economic boom. But he's also put policies in place that are going to make sure every single person in the country benefits across the board. And Mitt Romney, if he's elected, he's going to not raise taxes on the wealthy. And he is he's an opponent, he is on the side of less regulation.
Well, let's go back. Because having covered the economy and your business before, this is a reversal of sorts for you because you have been a fiscal conservative in the past and also potentially a supporter more of what you're saying Mitt Romney might put in place. So it's significant to me to hear from a fiscal conservative, a Wall Street guy, that you believe that some of the stuff that's being done by Obama is really what's needed for the economy. This is something different than I've heard in some of your position reports as far back as, say, 08 and 09. This is a reversal. Help me understand what you studied and what you saw then versus what you see now.
Well, I don't think reversal is the proper term. I think an evolution. The policies that were in place before, initially, were a pickup of the policies of former President George Bush. George Bush, they implemented policies that bailed out the banks with no strings attached. And the president came along and he implemented the same flawed policies of no strings attached. And then the president came along and created a whole lot of programs that created unsustainable growth. Cash for clunkers, etc., etc. They weren't sustainable growth. However, I realized that those initial policies that were put in place were policies that were put in place in order to stabilize the country. The economy was literally in free fall when President Obama took office. It was in free fall. And when the president came in, he put some policies in place that immediately stabilized the economy. Now, the programs that I had the position on that were anti-President Obama were because they were unsustainable.
Okay.
But now I realize that the unsustainable programs were to just put an end to the free fall.
A Band-Aid.
Exactly. And that was to hold us while he implemented some long-term policies.
Well, I'm hearing a Wall Street guy, a private industry guy, a banker, an economist type person, yourself, say this. Why has the Obama administration and anybody that he's had out there on his economic team been able to articulate this? Or have they, and we're not listening?
Well, I know there's programs out there where they're talking about the economy, but I don't think they're putting enough emphasis on it, and I don't think they've dug deeper enough. Also, I'm not sure. I mean, I don't understand where the president's people are. I mean, I understand that Larry Summers is no longer with the administration, but he was there and helped craft some of the policies, but yet he's been relatively quiet. Paul Volcker, he was there. He helped to implement some of the policies, and yet he's relatively quiet right now.
Well, may I suggest that they didn't know? Did they accidentally fall into what you're saying now is this economic boom? Or did they know? Did they build it? Did they craft it all along and they're running out of time because we're coming up in the election?
Well, I'm not sure where these gentlemen are right now. And I'm not sure why the Treasury Secretary is quiet and not out there, promoting the success of the policies.
Okay.
I mean, I'm just not certain. I'm not certain why members of Goldman Sachs and J.P. Morgan and the big institutions, even Caterpillar, are talking about these bleak future when J.P. Morgan had record-breaking earnings in third quarter.
Of 2012.
Oh, of this year. I mean, record-breaking earnings. Goldman Sachs earnings were up 49% in the third quarter. As a matter of fact, Goldman's earnings were strong across the board in every area except for three. And the only three areas where they were weak were financial advisory. And they weren't bad. They weren't losses. They still made astronomical amounts of money, but they were weaker than previously. Was financial advisory, investment management, and investment banking. But here's why they were weak in those areas. In their report, after the end of the second quarter, when they did their second quarter report, they came out and said that they were bearish on the S&P 500, that they had extremely low confidence in the economy moving forward. So, from a financial advisory perspective, of course they did poorly because the market continued to go up when they were advising that it was going to go down. Their investment management suffered in the third quarter. But again, if their investment management means they're managing portfolios, and if they're managing portfolios and coming out of the second quarter, they're talking about it's going to go down and it goes up, of course you're going to perform poorly. And then third, their investment banking. Investment banking is the process of bringing public companies to the private companies to the public market.
Well,
So
let's bare knuckles this.
Okay.
Because I don't want to bog the American people down in the brain of a smart economist. I want to know, bare knuckles, how this trend will affect Main Street.
The boom is here. The banks are sitting on an astronomical amount of cash. The banks are talking about it's going to be bad and they're not sure how to make a profit right now because of the new policies that the president has put in place, has put restrictions on how the banks invest. The banks can no longer do all this speculative investing with depositors' money. So the policies that are in place basically tell the banks there's only a few ways that you can invest this money. Number one way for them to turn a profit right now is to get the money into the streets to the American consumer and to the
Lend it out.
to the banker. They have to loan it out to, they have to put it in the street. Once the money hits the street, then we're on our way. And you would think that in the second quarter, they had an excuse because they were concerned, and they voiced these concerns in the third quarter, that they're not sure, they don't want to lend right now because they're not sure when the Fed's going to raise rates. Well, Ben Bernanke came out, and he came out and said, I'm going to extend QE3, and he basically said he was going to extend it indefinitely.
Okay.
And, you know, of course he's not going to extend it indefinitely. But he also said he was going to keep interest rates low, next to zero, for an extended amount of time. Now, they can't use that excuse that they're not going to put the money out because they're not sure about the rates, because I use the equivalent to when Hank Paulson came out and told Congress that he needed a blank check to help Fannie and Freddie. Everybody was appalled. But what he basically was saying was he needed a bazooka. The markets needed to know he had a bazooka so they would have faith in the markets. So,
Well, let's go back. Let's go back.
Okay.
Let's do this. So what I'm hearing you say is that the banks are doing well because the economy is on a comeback.
yes.
A. But the banks don't want us to know that they're doing that well. So they're parsing their statement. So they're saying, sure, our numbers, our books are saying we're earning astronomically, but it still doesn't look so good for us. And your position, if I'm hearing you correctly, is that the banks are saying that because they're still regulated very tightly under this current administration. So then I think that the bank's position would be, we know we're doing fantastic and we know that there's an economic turn coming, but we need to be really quiet about it so that we can get the candidate in that we want in, because we'll still be making that money, plus the regulations will be rolled back.
Exactly.
Is that what you're saying? And this is important to the American people.
This is important, and here's what needs to be understood. At the same time, now, all the bank stocks were at a low. I mean, Goldman was, if I remember correctly, it was under $30 a share, okay? But after quarter two, after they came out with their, bleak outlook, would you imagine, if they think it's really bad, that under this quarter, they came out and spent $1.5 billion buying back their own stock? Now, why would they buy back $1.5 billion? If they thought the economy was doing bad, or they were looking for a discount on their own stocks, they could have bought it back when it was under $30 a share. However, in the third quarter, during the third quarter, right after they gave a bleak outlook at the end of their second quarter results, they bought back $1.5 billion worth of shares. And they not only bought back $1.5 billion worth of shares, they bought it back at $106 a share on average. Now, why would you be buying that stock back if you really think it's going to be that bad?
Well, now, so where you are today is this. And I'll go back and let everyone who's watching know that you have forecast successfully quite a few of the economic things that have gone on over the past decade in this country, including moving out of a lot of your real estate holdings before the real estate market crashed, including moving over to commodities just before it became, the prices went up because you knew that's where your money needed to be for your clients and so on. So you do have a successful track record of stepping out in front of what's about to happen. I think that's important for people to know that that's what you've done. You've stepped out before these things have happened in the past. How do you convince people today that you're right again?
Well, they don't have to take my word for it. The data speaks for itself. Goldman Sachs, JP Morgan, Caterpillar, just 3 companies I'm going to give an example as that had record-breaking earnings. Goldman Sachs again bought back $1.5 billion, $1 billion with a B and a half dollars worth of their own stock. Caterpillar came out, had fantastic earnings, then came back and said, well, we have a bleak outlook. However, they've ramped up new plants and they're ramping up. So why are they ramping up production if they have a bleak outlook? It just doesn't make much sense.
Is it possible that many of these companies are weighing the potential of the economy coming back against other Obama policies, such as health care, in order to kind of mitigate what they think they'll earn? Is that possible?
Well, it's a whole lot of things that I'm sure that they're against, but let's be frank. You're talking about the 1%. Yep. You're talking about a group of people who are going to be affected by the tax hike. And it's just good common sense. When we go to the polls, we vote for the people who are in our best interest. And if we have any power to help influence that, that's what we do. However, they have the power to hold on to the money, not put the money into the street, and their opinions, solely their opinions, because if you read their SEC results and their charts, the facts say something completely different than their opinions. And their opinions seem to be tainted by the idea that there's a gentleman coming into office, if they can help it, that's not going to raise their taxes and is going to reduce regulations. So they have a direct benefit to not want to see this economy stimulated. But the problem is, they have to put the money on the street or they're going to continue to take losses. So all they're doing right now is holding out for another week and a half. And if they hold out for another week and a half, and they keep putting out the bias and the spin that the economy's bad, then it's going to be bad because their opinions influence the market.
Well, how do you spend, like today with me, this message matters. This message matters because many Americans vote their pocketbooks. And most Americans don't seem to know that we've turned this corner. So I want to, number one, you believe we've turned this corner. Number two, you believe it against your own former beliefs.
Absolutely.
So number three, how do we get the word out? How does it get out? If that's what you think is important for voters to know, what happens?
Well, here's what's important. The economy is getting ready to boom regardless who's in office. The boom is here. It's right at our doorstep.
So you're saying that if there are a lot of voters out there who are undecided, and the reason is that they don't believe the economy has moved under Obama, they're wrong, they need to hold tight.
Well, here's the thing. If they don't put the president in office, what's going to happen is the economy's going to boom, and they're not going to participate.
Wow.
It's extremely important that we get this president reelected. The boom is here, and everybody's going to benefit from this boom.
I get it. You